And good afternoon, everybody. I'm Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Monday, May 31st, 2021. Not a whole lot to be adding. And that's a combination of Friday's trade, Monday's Globex session, which actually started on Sunday, and then again, the Globex session that started this afternoon. I have to tell you, I'm not real convinced that the market is going to make a zip up higher. As I constantly say, stranger things have happened. And of course, a quick break above the hourly 50 and the 20 would add fuel to that upside fire. But accordingly, what we've been attempting to count is the fifth wave up. So that would put a minute 4 here, and we're going to be then launching up higher in that minute fifth wave. And I'm just going to go up to the daily so that we can see it. So that we have minor wave 3, minor wave 4, we're in minor wave 5. Now, bringing it back down to the hourly, now we can see that within this minor wave 5, we're likely putting in a triangle fifth wave up. And if that's the case, all of these waves are going to end up being 3-wave affairs. And so there, under that scenario, wave 2 wave 4 can for sure overlap wave 1. Wave 2 still likely is going to go 100% or close to it of wave 1. Wave 3 is going to end up being a 3-wave affair. And that pretty much is it's like a 5, and then a B, and then another 5. So, I mean, yes, I can count it as a 5 up, but the failure to really launch high enough above the top of wave 1 just kind of keeps things in perspective of, again, what we're trying to count on the upside, what we're trying to look at, but it's a finishing move. So again, I'm going to go back out to that daily. We are finishing a move, and this move is really big. So just bear with me and follow me here, because I want to just talk about the extent of what we're looking at. We are counting an intermediate degree 5-wave advance. Okay, so now I'm going to go out to that monthly chart to show within that we are in a primary degree 5th wave advance. Excuse me, a primary degree 5-wave advance. So within this primary wave 3, we are finishing the 5-wave sequence, the last 5-wave sequence up on an intermediate degree that's going to complete it. Okay, so this wave that we're in now, this primary 3rd wave, started in July of 2010. So it's been underway for 11 years. It's quite a chunk of time. That's how long this portion of the rally has been going on. The larger 5-wave primary degree started in 2009. So that degree, which is finishing a cycle 5th wave, we are eventually heading to a very long-term high top. But right now, we're just finishing the 3rd wave out of 5 that's going to take us to that ultimate high. Okay, now I'm going to bring this back down. With all of that in mind, that we are finishing an intermediate degree 5th wave. Now I'm going to bring it back to the hourly. And within this, geez, I'm going to keep going on to the daily, I'm sorry. Within this rally, we are in a minor degree 5th wave up, which started mid-May. So now let me go back down to that hourly so I can show you. That's it right there, okay? So there's the 4th. we're in this very sloppy forming 5 waves up, but it's a finishing 5. Now, it truly just needs to get above this 4,238.25 and be complete. And then it's going to, so you see how the completion point stacks up. So if it's going to be completing a minor wave 5 of an intermediate wave 5 of a primary wave 3, that's a very long-term top. I mean, we just looked at it, it's 11 years in the making. So it's 11-year high. Actually, it's an all-time high, but at least out of this sequence. So where would I expect this thing to finish? I would expect it to be a blow-off. So I don't know what's going to ignite the fuel under, but then I've been kind of discussing that about the Dow. You know, kind of like in our session where the market is basically be moving sideways, the market will go down and then they come in and they buy the Dow beginning immediately in the Globex session, and they just continue, and then the next day it kind of just continues. But it's basically kind of been in a box. It's kind of just like traded in a range for the last week, at least I'm going to say from this high, which was the 24th of May. So last week and a bit more, it has traded in a range. And that range has not always been the easy. But currently, we are thinking that this is the completion point of a 4th wave, and that we're already into the 5th wave. Now, to really push that, the market really can't stop here. So I had said, you know, coming into today, that if that completed it, we can do 5 waves up. Our first resistance point was at 42.15, and then that might contain this very first initial wave up, and then we drop down in a wave 2. That could very well be what's happening. What it can't do is drop below 41.78. That it cannot do. So already in this particular session, in this morning's Globex session, it got down to 41.90. So got down to within 12 points. 12 points in the S&P can really happen quickly. All right. So if it's going to hold to the count I just gave, it's got to pick up its nose and its tail, and it's got to run higher. And that can happen. It certainly kind of came off into a very good start in Globex. Again, it took it right up. And, you know, but it's got to stop after 9. It is stopping after $10. So it can't. It's really got to run. Now, granted, we're not in session, but the Asian markets are going to be opening here. And then we have the European markets. So that could add some oomph if they push hard enough. And so that has to bring it back about 42.15. And then it really has to start heading up to 42.38. Ultimately, I think that this 5th wave should, at an almost minimum, take us up to 42.75 to 4,300. We have a zone there. 0.618, 0.705, and then 0.78.6. So this is a zone that I think will complete this rally and could be putting in an 11-year high and then produce a much larger primary degree 4th wave correction. And that will measure out. But if indeed the market starts to drop tomorrow, so I'm going to change gears. Now we're given the upside. I'm still going to use those, but now I got to remove this particular extensions and draw additional ones. Because if this is a 3 and this is all just a 4, then let's take a look at where we would expect the market to come in. Of course, I really always love to just give me okay, there, and then up to this one. Okay, so let me bring this down so we can see where we are. So these are the levels coming off. Now, what we are now comparing is this A wave to a C wave. So in other words, if this is going to be a fourth wave correction that we thought could have ended there, but maybe it didn't, because this is kind of crappy and this is really definitively crappy. But this is corrective and this is supposed to be very bullish, and I don't think that it was. In any case, the drop, the first relationship between the C wave and an A wave is that it is going to be 100%. So it's going to be equal in length. That comes at 4,180.25. Yeah, it could end there and we'd accept it with the low of wave A at 4,178, we're going to call it, but it's 4177.75. So if it goes down and makes a new low, that's the expectation. If it were to fail at 4180.25, it's going to blast. It's going to blast off of that level. So in other words, it'll be quick and done. Now, what we have just below all this is the next most common area, and that's this zone down in here, 1.236 of wave A, 1.382 times the length of wave A, 1.618 times the length of wave A. So this one is the most common. The next most common would be that it's actually going to only come in at 0.618. Well, it already did that, but too big of a failure. So because it would be 12-point failure versus a 3-point failure, if I looked at it this way. Okay, so in any case, if the market continues to build on the upside and it can start to break above the 50-day moving average, which right now is holding it, and I would imagine the 20 is sitting right up there too. So, and then we will have, this just should provide resistance. It maybe did not provide that much support, but now it can provide resistance. So we have resistance at these various levels. If indeed it's going to move higher, it shouldn't just flip and just fool around and not move anywhere. So low volume, that's going to keep it in a tight range. I don't know necessarily why both sides are waiting. They're waiting for something that's going to give them the green light to go up or down. Because you see it just kind of trades in a range and there's enough sellers to pull it down. There's enough buyers to bring it back up. So they're in a comfort zone here and something's going to have to break it out because the buyers are looking for much higher prices. And those, obviously the sellers just want out. So maybe they're not establishing short positions, but they're just getting out. They're losing patience. In any case, we have upside, we have downside. I'm going to leave it there. Underlying all of this is the continued rant that I make about trading what's in front of you and trading with your moving averages, with your Fibonacci, and with Elliott. That does work when you take this down and you put it on even the smallest frame, a 1 minute, 2 minute, a 5 minute. The patterns still remain the same. You might have to pull it out so you can realize at what degree you're doing this pattern, and then to work out your Fibonacci's level, which would correspond to a bounce off of wherever you are or a drop down from wherever you are. Those continue to help you on intraday trading. Moving averages are going to be very, very helpful in terms of you got a 1, 2, and a 5. Then you're also looking at a 30 and an hour. But it's 1, 2, and the 5 that when those moving averages get in alignment, that they're all pointing in the same direction and in chronological order, so to speak, then you want to be in that move. I don't care if it's up or down. You want to participate, and you can't stop to think about why. You just have to go because this is all technical, and that's how the market's trading at that particular point. The buyers are coming in and it's pointing up. They're just going to continue to come in because that's what those moving averages are telling them. Now's the time, push the button and go. Conversely, if it's pointing down, the same thing. You can expect that sellers are going to stay in control of the market. So we don't want to, I don't care why. We're going to have to pay attention to the technicals and look at the market from that type of view. And that's where you're going to make your money that you want to make trading. I say that because, folks, as I've been saying, I do want to restart the trade room, my trade room. And I'm restarting it as an educational site, a site where learning is the primary factor, where people can come in and fine-tune their trading skills, maybe by adding how we use moving averages, maybe by adding Fibonacci or adding Elliott. These are tools that are extremely helpful, and they help you all the way down to the 1 minute chart. You can trade on a tick chart using these same strategies. So It helps to fine tune trading. It helps to create an atmosphere of being in control of your trading, because you're processing and you're trying to just stay with the market, not letting you think you can control the direction, but the market's controlling the direction and you're just along for the ride. But it's being able to determine, is it going to be a short ride, a long ride, or whatever. So then you're going to be able to pick from your skills. These are the things that I want to start bringing into the trade room, that I want to start sharing, that I want to build a library with people, or with my things, the knowledge, so that it's accessible. And more on that at a finer tune. I'm going to leave it all there, folks. I've taken it up enough time. I hope everybody has a really great trading day tomorrow. The next update will be Tuesday, June 1st.